Overall, daily chart had a lot of overlapping bars recently. We tried to form a double top with the June 15th high. We formed consecutive bull bars over the past 2 trading days, and then we reversed down today. Bears are hopeful that this is a credible double top. I think this low is too low. I think this double top, June 15th, and this one, it's not close enough together. So I still think we'll probably have to bounce and test the June 15 high at a minimum. Realistically, we'll probably get back up to the all-time high over the next several weeks. 10-minute chart, gaps down on the open, and I thought that the gap down was decent. We made a bull reversal bar. It was a strong enough bull reversal bar that it's reasonable to expect some kind of second leg. One of the problems that the bulls have is it's a gap down, and because of that, we may end up testing back to the one low. In general, 20% chance bar one is the low of the day. Bear bar on 2, probably buyers below. However, because we have a gap down, it's a bear breakout. I think of a gap down as a bear breakout. So it's a breakout, pullback, sell on a low 1. Then we started to get follow through on 3, probably buyers not far below. Probably buyers not far below on 4. But now we have a 4-bar bear micro channel. And not a great buy signal bar above 4, that increases the risk that there might be more traders selling above the bar 4 high rather than buying it. And because of that, I think bulls, they need a better buy signal bar. And then we have 5, bar 5, another bear bar. Something is not right with the bull argument. 6, we try to get the upside breakout. That's good for the bulls, but we have a possible double top with bar 1 and 6 following 5 consecutive bars in a micro channel. And not a great buy signal bar above 5. There might be more traders selling above the bar. And we have 7, a bear reversal bar. It's basically a second entry after the bar 2 reversal down. Good for the bears. What are the chances we're going to go a lot lower? We may go a little bit lower, but there's probably more traders buying in the bottom third of this range than selling. Doji on bar 8. That is not a good reversal bar. You have bulls that bought the close of 6, disappointed 7. And what are they going to do above 8? I think it's reasonable that the market may try and rally back up to the 6 close, but there's probably sellers somewhere. If you bought the 6 close and you bought more lower, you're probably disappointed and you may look to get out on a bounce. 9, bull bar, but again, I think probably sellers not far above. Then we got the surprise bar on 10. 10 enough of a surprise. We may try and get a second leg down, but there's probably buyers in the bottom third of the bar. 11, bull bar, good for the bulls. We'll probably rally to the 10 high, but enough of a surprise. There might be sellers not far above. 12, now we have consecutive bull bars, 11 and 12. I still think probably buyers below in a second leg. But then we have 13, the breakout, pullback, sell. What about selling? After consecutive bull bars, probably not ideal. Probably better to wait. We got the entry bar, the follow through after 13 on 14, consecutive bear bars, 13, 14, good for the bears. Probably going to get a second leg down. 15, now we have 3 consecutive bear bars. I still think probably buyers below in a bounce. 16, outside up, bull bar closing on its high. Good for the bulls. As far as buying above the bar, some bulls might, but with 3 consecutive bear bars, that increases the risk of sellers above. And then we reverse down on 17. That's not what you want to see if you're a bull. Then 18, buyers below in a second leg up after 16. Good for the bulls. But why? The bad follows through on 17. If 19 reverses down, that'd be a second entry buy. 19, second entry, double top with 13. That's a problem for the bulls who bought. And then 20, a bear bar. Not a great entry bar for the bears. It's a doji, so that increases the risk of buyers below. But not a great buy above 20 either. And 21, another bear bar. Looks like it may try and go at least a little bit lower. But we may have to pull back and test the 18 close first. 22, bull bar, not a great buy. Probably sellers above, but again, we may test the 18 close before we try and sell off. And then testing the moving average with 22 or 23. But at this point, it's basically a triangle, so pretty much 50-50. And then doji 24, not a great buy. Triangle, breakout mode, best to wait. Bear bar 25. At this point, pick a direction, and it's basically 50-50. So it's a coin flip at this point. Really not great. It's really not all that great in either direction. 26, doji, probably sellers above. And then 27, the bear bar, good for the bears. Looks like probably going to go at least a little bit lower. 28, doji. And at this point, I suspect we'll probably test the 16 low. Not a great buy, 28. And then 29, we tried to go lower, but we have a doji. Makes me think we'll probably try and bounce, but the channel's so tight. That's a problem for the bulls buying. 30, a bear bar. The bulls, they're not getting buy signal bars. And that's a warning that the bulls are not as strong as they could be. 31, bear bar, doji. Probably sellers above in a second leg, but as far as selling down here, I'm not willing to. We're right at the 16 low. And that's an area where there might be more traders buying. And then bull bar, 32, good for the bulls. What about buying it? Some traders will, but it's a micro channel, 25 high, 31 low, possible, and therefore that increases the risk of sellers above. But it's a possible double bottom with bar 16. Doji, 33, not a great entry bar for the bulls, but it's not a great low one short for the bears because it's a micro channel, 25 to 31. I still think sellers above, and we may have to fall below the 31 low, but not ideal. 34, bear breakout, good for the bears. Probably going to go at least a little bit lower. 35, follow through. Now you have consecutive bear bars. I think it's a little bit of a problem for the bears. The bulls, the channel is getting a little bit too tight. One thing I do think is that we'll probably test back to 32 close sometime soon. We're breaking out of this triangle, so it increased the risk of a second leg down and a test to the 10 low, but probably not going a lot lower. 36, a bear bar, but tail below the bar. And then 37, a decent bear bar. What about selling it? That's what I talked about. The bears can be short, but if they get a bull bar closing on its high, I think they have to get out. There's too much risk that we get a reversal up. And then we got the bull reversal bar on 38. I think that's disappointing enough that it increases the risk if there's sellers, probably not far above. And then 39, it's a strong enough bar. The consecutive bull bars, 39 is a strong enough bar that it makes me think we'll probably go at least a little bit higher. And then 40, a bear bar, it's a low two, it's a low one short. Probably buyers not far below, but we may have to test all the way down to the bottom third of these two bull bars. And therefore, bears selling. If they're willing to scalp out and quick to react, they'll probably make money. 30, 41, good for the bears, but probably buyers below. Then 42, a bull bar. But following consecutive bear bars, there might be more traders selling above. I think the problem for the bears is that we may have to test the 32 close. So selling up here, at least initially, I think it's a little bit dangerous. Doji, 43, probably buyers below. And then 44, a bull bar, but right at the moving average, double top 40. If the bulls are buying here, they need follow through. Otherwise, if we start to stall, they'll probably get out. And there's the stalling, 45, a bear bar, the second entry. That's a little bit of a problem for the bulls. Doji, 46, but breakout pullback buy. That's really not a great high one buy. You can call it a triangle. In general, 50-50 chance, but holding below the moving average, weak buy signal bar. And 45 might be a little bit stronger for the bears than the bull bar on 46. 47, we triggered the buy above and sold off on 47. That's good for the bears. I suspect we're probably not going to go much lower than 48. We have a doji, not a great sell, not a great buy signal bar for the bulls. Some bulls might buy, and realistically, some bears might buy back their shorts above the bar, but I think it's a tough bar to buy. And then entry bar, really not what you want to see. If you're buying above a bar, such as 48, and you know it's a weak buy signal bar, you need a strong entry bar to compensate for the weak buy. And if you don't get it, a lot of traders will give up. And that leads to the very next bar. We have another leg down for the bears. That's good for the bears. Probably going to try and test lower. And instead we got the bull bar 51. What did the bulls do? I think it's a little bit problematic here. And we're getting a triangle. So it's breakout mode, but why are we holding below the moving average? And now we have another buy signal bar. Because it's right below the moving average, I think that's a little bit problematic. 51, bull bar. There might be sellers above, but I think it's a dangerous bar to hold short above. And therefore, I think it's reasonable to buy back their short. Bear bar, 52. That's a bear reversal bar. I think the bulls who bought above 51 probably have to get out below 52. And we may end up trying to test down lower. And then 53. We tried to break to the downside, but we have a tail below the bar. Really not ideal. Probably more sellers above. And it's not a great bear entry bar, but it's not a great buy signal bar for the bulls either. And then 54, follow through for the bears. Good for the bears. probably sellers above in a second leg. Then we had the bull bar 55. I think it's hard to hold short. And then we tried to get break above 52 during 56, and we failed. Low one short, probably buyers below, but we may just go sideways. And then we formed 57, another buy signal bar right at the moving average, but not strong. But it is a buy signal bar in a prolonged trading range, so 50-50 probability. And then 58 bear bar. And then we just started oscillating back and forth. At this point, it's really close to 50-50, and it's not worth trading. We tried to break out to the upside, 62, 63, probably strong enough that there's buyers below. But then the bulls, instead of getting the upside breakout, we just continued to go sideways. 67, another bull bar in the tight trading range. Again, you got to assume 50-50 probability. And instead of breaking out above it, we found sellers and we reversed down. And then we ultimately ended up breaking out below the tight trading range. And we pretty much just went sideways, reversed back into the range, and then sold off. And you can see we have a bear bar pretty much closing at the extreme of the day. When you look at the day, it looks good for the bears, but obviously most of the day, pretty boring. Trading range price action here. We had a bear breakout, lots of trading range price action here, bear breakout, and then lots of overlapping bars right there. As far as always in, I think a really difficult day for always in. If you sell below 7, you probably keep a stop above 7. I don't think it makes sense to buy above 8 or 9. You got to get out of long shorts if you got to get out of longs above. You got to get out of shorts above 11. If anything, I think that's not great either. When you see a big bar like 10, it's going to pull back. Buying above 11, if you do, you probably get out below 13. If you sell below 13, you got to get out above 16. And then if you buy above 16, you got to get out below 19. You can see just how much it changes back and forth. You're probably always in short 27. If you sell, you get out above 32, and then 32, do you buy it? You can, but it's a fairly tight channel, not ideal. And then some bears will sell either below 34 or 35. And if you do sell, you get out above 38. And then if you sell again below 40, you get out above 42. And then if you sell again below 45, and you pick a bar, you probably get out below 51 or 48. And I think it's really tough to just sell again below 52. Taking stop orders when the trading range looks like this is really low probability. That's really not ideal for traders. I wouldn't do anything as far as stop orders in there. Limit orders, probably sellers. Probably sellers above 5 and sellers at the high of the day. Probably buyers below 2, buyers below 1. Probably sellers above 8, sellers above 9. I think that was reasonable. And I thought buyers below 19 were never triggered. And probably sellers above, but I think it's tough when you see a bull bar closing on its high, especially at the bottom of the range. Probably buyers below 40, buyers below 38, even buyers below the 38. Buyers below 40, buyers below 39, even buyers below 38. I thought probably sellers above 46, so it's really tough to take all through here. Just tight trading range. Buy below bars, sell above bars, but breakout mode. So I think it's really not ideal. And then 73, if you're doing anything down there, I think you're probably buying. But, again, not easy to do, and plus it's late in the day. Buy the close, sell the close. Really no good buy the close, sell the close. Maybe I wouldn't even say this is great buy the close, sell the close. So as far as there's a lot of sell the pullbacks and buy the pullbacks, but as far as just traditional, wait for a bar to close and sell the close of the bear bar, or wait for a bull bar to close and then buy the close of the bull bar, there's really no good ones. Let me take a look at some questions. Overall, I get it. People they look at these kind of days and you look back at the day and you say, wow, it was clearly a strong trend day. We had a lot of bear bars and we have a bear trend bar. So you should just sell every pullback. But just think about that for a second. Just look at the bars. Okay, let's go to here. You can sell there, sure. But what do you do right here? Do you stay short? If you sell here, you have a series of bear bars. Do you stay short above that bar? That might be a double top, and we could easily reverse back in the center of this range. Okay, now we have a bear breakout. What a strong bear trend. You stay short. After you see this, you can, but I think it's more dangerous than it appears. Now we're starting to go sideways. What do you do with this? You start selling below bars and just trust your stop. When the market looks like this, it's really difficult to swing trade. And the reality is, If you just think about it, in this case, bulls, what's interesting is bulls aren't making money buying above bars, but they're making lots of money buying below bars. Typically, when you make money buying below bars, the market will typically evolve into a trading range and start probing and testing prior breakout points. Bulls could basically buy anywhere below a bar and scale in. Buy below here, they could buy more, they could buy below here, keep scaling in, and they're going to make money. And at some point, when the market starts to do this, and the market's in breakout mode, and it's really dangerous to be swing. You can pick a direction. You can buy above 62, stop below and hold. You can sell below 66, stop above and hold. And ultimately, I think what's so interesting about this day is if you remove these 3 bars, you basically had pretty much you need a trading range price action the entire day. It doesn't look like it because it's angled down and it looks broad. But in terms of direction, the market sold off here, went sideways for a few bars, sold off here, and this is bar 37, this is bar 68. So how many bars is that? We went sideways for basically 30 bars after the breakout. We broke out here, but if you trade the breakout, you get a deep drawdown. That's classic trending trading range behavior. Today I had a bullish bias and I didn't ever end up selling. And is this okay? Basically the question is, do traders ever have overall biases in one direction where it prevents them from taking trades in the overall trending direction? Yeah, that happens a lot to traders. And they also comment, they said, like today, I had an overall bullish bias based on the daily chart and weak looking 5-minute price action for the bears. So I didn't sell all day since I was expecting buyers below on almost every bar. Well, your intuition actually, when you think about it, you weren't wrong. You just look at every bar. I talked about that a few minutes ago. If you just take any bar and buy and imagine buying below the bar and scaling in, usually you can make money a bar or two later. Buy below 36, scale in a bar or two, you make money. You buy below here, scale in, make money. Buy here, scale in, sideways, you can get out, small profit, break even. Buy below here, scale in, get out, break even. Buy below, get out, break even. Buy below here, scale in. Oh, you got trapped. But look what happened several bars later. The market retested it. And when that typical price action happens, traders become much less willing to bet that the trend is going to last for the rest of the day. And that's basically what happened. As far as tomorrow goes, and we have a decent bear reversal bar, that's good for the bears. It makes me think that that's good for the bears, increases the odds that we're going to try and at least go a little bit lower. But we'll see. Overall, I don't expect that we're going to immediately just race down sharply, but we'll see. All right. Thanks, everybody. I'll talk to everyone tomorrow. I'll see you tomorrow.